Testing, testing, 1, 2, 1, 2. Setting up my YouTube blog, which we should be live on YouTube. Voila. Hello, guys and gals. Whole load of us voila. On here. Hello, guys and gals. All right. Whole load of us voila. On here. Hello, guys and gals. All right. GMC. Good evening, Brian. Hello, GMC Company. How are you? Okay. GMC. Good evening. You can hear me okay, right? Just let me know if you can hear me on the chat here. Okay, so I've not really done anything serious yet for our, oh, I gotta open up my screen, don't I? Do my sharing, just give me a second here. Where's my sharing? Share screen. Okay, so you should be able to see my screen now. All right, so as I said, I'm not doing anything formal. Okay, cool, thanks for letting me know. So nothing formal. If you got any questions, just let me know and we'll jump into whatever questions you may have. So over the last couple of weeks, 2 weeks, I have been looking at two things, flags and pennants, and I've already talked about them on my YouTube page or my YouTube channel at Quantlabs. Let me just pull up the video. Oh, sorry, no, I don't have that video. It's not on public. It's back on behind my paywall. So let me just assume you've never been to this before. Okay, so let me show you the basics here. I'm just going to go back to what flags and pennants are. So there's so many different interpretations of flag and pennants. So let's say we just go with Investopedia's definition. Basically, we have a random walk situation. Our flag can have what they call a pool. So in this case, we have a move up, and then the formation of the pattern is a move up. And then we have this similar to a flag position where we go into a random walk. And then typically, depending upon the direction of the market, you can expect the length of the flagpole to be the next price, the next expected move from the top part of the flag. So let me try to find you an example here. Yeah, so right here, we have this in the sky blue, this flagpole portion. We have it go into a random walk, and then at the end of the formation or the pattern's complete, that next price move should be the same as this flagpole. That's how a flag sort of works. And then what we do on our positioning is set that next price move for entry on that price target. And then we can also use the lower band of the flag as our stop loss. That's basically what it's supposed to mean. And you can get the same thing when you're in a decline, and then you go into a flag position, or in this case, a pennant, and then we use the flag portion as our price target. Okay, so that sounds pretty easy, but here's where the confusion comes in. So if I was to pull up another definition, I don't know, I've never seen this one, stockcharts.com. What you'll find here is the same idea with the flagpole portion, the up and low boundary, and then the up move to the next price target. Okay, so that's what a flag is, and it gets very confusing. We can have descending or falling bears, which can be a up move. We can also have a rising flag as well, which indicates a bear market. So Ashley, Madison, ha ha ha. I would trust that target only if upper line is broken with strong volume. Yeah, there's a lot of dependencies here, a lot of factors. Some of them are probably that volume based, but these can break down. And that's what really complicates the coding of this, because that's what I was trying to do, is to automate this type of flag. And I could show you a pennant. Well, let me show you first a rising or a falling flag. So if I'm looking for a rising flag trading in Google, let's see what kind of results I get here. Sorry, it's called a bullish flag. So it's usually kind of consistent between a bullish flag and a bearish flag, but every time you look at different sources, a different definition. Yes, you can get different patterns that will break down. I do believe, I'm trying to think of which website has a good example of that. Let's see, baby pips. I think that was the one. Flag. So this is their definition of a flag. No, that's not it. And maybe it's this one. Okay. So as an example, what we're dealing with is a support and resistance line. That's the basics of a flag or a pennant. So as I said, this definition is if you go into a downtrend, it consolidates and something can happen here. It could either drop, continue going into that downtrend, or you can have a market reversal, but there's obviously numerous examples of that. So back to Ashley Madison's question, you go into a decline mode or downtrend, consolidate, and then right here is what he's referring to. You could continue to go into a downtrend, but it may reverse and go back up. So these can be broken. They're not very predictable. That's why I would not use them exclusively. And as I said, to code these up, theoretically are easy, but they're not. It's a problem. And here's a bullish pennant as well. I have an uptrend, and theoretically the uptrend should continue. But again, when it consolidates, it could tighten up, but it could be a market reversal. And then we get into triangles as well, which is the same definition as a pennant as well. So the combination between these two are the same result, but they're just somewhat unpredictable. So I'll give you an example of something that I was going through. So I don't know if you guys watch my cryptocurrency videos I put up last week. So in my case, if I do the CCXT package, CCXT, just got to make sure or examples, and then I go into the data. Okay, so if I show you the number of symbols that are available to trade in Binance, the exchange Binance, now this is all hourly data. So now I have the ability, I've improved this from last week, able to download 315 pairs. The problem is these patterns, for the complexity it takes to code them, this is the problem. 315 pairs, up to 1,000 hours of each one. You do the math for how many days that is. And I was not able to generate one of none of these patterns, neither a flag or a pattern. So when you factor in 315 symbols, over 1,000 hours of data in each one of these CSV files, I was not able to identify these patterns. So I've known that they were rare, but I didn't know that they were pretty well non-existent. So that was a challenge I faced. And as a result, I just gave up when I back equivalent of a back test on it, trying to generate the code for the algorithm to generate these patterns, the bullish, bear, sorry, the flag and pennant, generate the pattern against the data, and it just didn't. Well, I was not able to generate over 315. As I said, for Ashley, we're going to be out of sync on your questions, but I kind of try to address it where I've got the flagpole, and that's not the complicated part. The complicated part, as I said, is the number of symbols when I download, in this case for Binance. They're so rare, it's not really able to be able to generate any patterns. And that's the problem, and that's what makes these patterns very difficult. Or not, I shouldn't say difficult, but not worth pursuing, because they do exist. They're out there. Yeah, they're a problem. So any questions on that? Let me know. I'll sit around. Oh, Ashley's got a question. Hang on here. Question is, I find that the general triangles are the most profitable patterns in crypto, and they have happened constantly. Well, the follow-up question for you, Ashley, is what data frames are you using, and what platform are you using, and what's your data source? Who's your broker? I'd be curious to know, because that way I'll be able to determine the problem. When you say triangles, I'm thinking I'm defining them the same as pennants. So if you can follow up those questions, let me know, and I'll be here. So I'll wait it out. Yeah, that the pennant and the triangle is a difficult part. How many people are we up to? 4? It's a big topic. So that's a difficulty, but I'd like to know, I do realize that the triangles may work, but I'm not sure if we have the same definition, or a triangle and a pennant are the same. So again, just let me know your time frame and your trading pattern. Okay, so you're looking at hourly to data. Okay. And how can you use triangles with Fibonacci? You can't. They're separate from each other. That's for Kev Ha. Yes, how can you use triangle pennants with Fibonacci? I think those are 2 separate processes. I have a variety of charts and indicators that I use that are just to overlay each other, and sort of like a genetic algorithm, that if they all line up with the positive indicators I'm looking for, then you have a potential high probability of a trading signal. So I use those combined. So that's what I'm using. Any other questions? So let's take a look at the triangles, because I'm very interested, because if you read these links that I'm providing, you'll find these are reliable trading patterns. Ashley responds, I would define a triangle as simply an upper trend line and a lower trend line that converge minimum 2 swing points per trend line. Okay. Yeah. So are you doing any form of regression? Because you have to also factor in the slope of the angle, so on and so forth. That's kind of what a pennant is. If I can find them more rich, possibly. But when you say you find them all the time, like if you were to look at my 1,000 hours, 1,000 hours worth, from your experience, how many would you think triangles you get in that data. You don't need to know the direction. Again, if you look at this, the bullish flag and the bearish flag, they have opposite moves. So basically, let me just try to find a bullish flag here for you. They are predictable, and the direction does matter if I can find it. I'm just looking for it right now. So, yeah. See right here, they look the same, but it just depends on your uptrend, the before the pattern and after the pattern. So, but I'm sure you're going to see instances of this breaking down, and it may consolidate, but does not necessarily mean that it will continue with the same direction. That's possible, but I have other indicators that you can use that will predict the direction. A good example is the market, the head and shoulders, and the harmonic patterns that I've used. But do realize the harmonic patterns will give you a 40 to 60%, 40-60% probability. Now, those are pretty good. It's a pretty good accuracy if you ask me. It's still unpredictable, but when you overlay it with the moving averages, I think it can help, and especially the moving average crosses really help. So you also respond with actually responds with, because either way it breaks, it's going to break hard probably, and it's no different than other indicators. So yeah. That's the problem, and it's unpredictable. But when you overlay it with the Fibonacci as a good one, moving average is a good one, and there's other classic indicators. The wedges and the flags, the pennants are good, but from depending upon your platform, if you have the ability to do that and track it, they are very good to work with. The problem is, even in Duca's copy JForex, they have a function in there for patterns, and you can tell that they've struggled with coding up the patterns themselves because it's like one of these hidden features. It's not a feature that they promote in the platform, and it's not predictable. But the best ones I find are the harmonic patterns, because those are historical pricing action when you go into these random walks. But it's so critical when you see these consolidation patterns that they're hard to measure, but to be able to figure out if the trend continues or not. But one of the patterns that I've looked at that seemed to work pretty good is the head and shoulders, and the reverse head and shoulders is a classic market reversal. So it's another one you can add, but adding into the wedges and the flags and patterns, they do work. I'm not denying that. Just coding is a tough part. Any questions as well? I can show you the wedges as well, but they're hard to code up. I don't think it that critical to know if it's continuation or reversal, but certainly would be nice. I see. Okay. Yeah. To know the market reversals is probably one of the hardest parts. But when it goes in these random walk and it just goes up and down, consolidates, it's very tough. And that's why I think one of the big reasons why a lot of the pro traders take out the 5-minute, 15-minute time frames, because that's a lot. They're very noisy at those time frames. But when you start more focusing on 4-hour daily charts, you're doing okay, because you take away all that noise, and you can still use the classic patterns that I list and just use those price targets you get out of, let's say, the Fibonacci, the pricing Fibonacci levels. And then on the daily, you just wait on the daily or even the 4-hour to see what happens. But that's a more slow moving instrument or asset class. But with crypto, because they're so volatile, and they move around, there's these large price swings. Hourly is a good time frame, but I think anything below that can throw off your algorithm. And when I did my talk last week on Tuesday, I asked the crowd, it was about 50 people, if they see the same thing, where if they trade overnight and increase their time frames to, let's say, daily or hourly, their trading results improve. Unless you're trading like a high speed in terms of HFT and you're doing mean reverting and market making with that, or what I call dancing on the top of the order book, you can do really well. But the complication of the coding of that, as I said, it's pretty complicated. You got to move to C++ to do that. And to be honest, the amount of work it takes is just incredible. Anybody else got any questions or comments? So I'm putting all my focus on the YouTube stream. I don't think I have anyone on the other one. So appreciate all the likes. So that's the complicated part. I could also show you the wedges. The wedges are even more complicated because I took a look at some of the code in other platforms and how they're done, and they're pretty small for the flag and pennant, but when you move into the wedges, it's about 2 to 3 times bigger than the flag and pennant. So let me just pull up the wedging. So yeah, baby pips, this is a good one. And basically it's kind of similar to a pennant or a triangle here, but it never meets at the end here. And remember, these can be regression, and you can see the slope of the line and figure out how steep it is. And then that could be a measurement of profit. Here's a good example of a wedge where the price moves up, consolidates, but doesn't touch each other at the end, and then it drops. But you can see how unpredictable this is, because if you go through these links, they'll explain why these moves happen, but they always can be unpredictable, because it's a very typical move when you're watching 5-minute or even 1 minute. You get a lot of these, but to find the predictability, it's tough. And some of the other problems that I find, if you're trading on, let's say, even hourly, I think depending upon the exchange you go with or the broker, there's a lot of whale traders in there. They'll put in these test like partial positions and get them filled to throw off the trading. So you come in here and you get these various legs moving up or down depending upon the trend, and each one of these are big. But the problem is that they're pumping the market, and it's not real. It's not a natural rhythm of the market, and they're not really manipulating the market because they're big enough to move these instruments at such small levels, and they can scare you off from automated trading, and that's a big challenge too. Usually these moves where you get 3, let's say 1, 2, 3, 4, 5 legs. So you got 1 leg, another one going up, back down again, that's 3, another one, that's 4, 5, and you might get this 5th or 6th leg up and then lets it drop, because the whale trader can probably pump that market up, not manipulate it illegally, but just be able to be big enough to get this kind of move, and at the same time shake off other algos that are watching it, the little guys like me, maybe you, I don't know, but that can happen. And that's a wedge. So we have the same thing: falling wedge and a rising wedge, bullish wedge, or a falling or a bullish wedge. And as I said, these are more complicated. But the one thing I like about head and shoulders is that you can have an expected move. After that, note that I can code up, not so bad. But yeah, this is typical, and they're very hard to code because of the unpredictability. as well as trying to get the slope of the line. And from what I've seen in the data I've pumped through, I don't even see any of them, but it could be my code. I don't know. Anybody else got any questions or comments or anything? So I blabbed for half an hour. Now I also wanted to see if anybody had any other questions outside of all this stuff, just general trading or general programming. Ashley, so are you going from 100% hands-off approach, meaning fully automated? Yeah, that is the purpose. This week I'll be funding a cryptocurrency account and seeing what happens. Do alts have better patterns to trade or BTC, ETH? I've got a video on that, Kev. Let me show you. It's obviously on my YouTube channel. It's a recent one I just put up last week. Let me see if I can find it here. Yeah, it's this one called, I experimented a lot about downloading data with that CXT package for Python. So this one, I was able to download 107 cryptocurrency pairs, and it's a 44-minute video. What I do in there is I just use exclusively the Head and Shoulders one, and I was able to determine about 10 different patterns or results from just that one pattern. And within a few hour moves, I was able to get 10, 20% moves using this methodology, and I was able to see that. And the other question is regarding your altcoin. Usually you get much higher percentage of the ones that show potential have not using Bitcoin as their base, but using Ethereum as their base. And from what I've read, that means there's more hype on Ethereum because of how Bitcoin's falling more. And as a result, the Ethereum is a better one to trade as the base quote. But in terms of the alternatives or altcoins, it's hard to say because I see the moves. Question is how liquid are they? How long will it take me to get a fill? And once I get a fill, will that obviously affect my closing position? So that's the big question. Until I test it, I don't know. But if I know I have some moves in classic crypto pairs like Ethereum against Bitcoin or Litecoin against Ethereum, they have higher volume, higher liquidity. And the altcoins are, I think, at this point too small to answer your question. So it's tough to say. It just depends if there's news on the altcoin. Has it been a newly issued altcoin as well through an ICO? The question really comes down to the liquidity. But the bigger ones, I can definitely see these moves. So you can watch that video. And as I said, now I've improved it. This is using Binance, but I've improved it now now I'm able to download 315 currency pairs, which means, and then that increases my odds of trading opportunity by multiplying it by 3. Kevha asks, is it fair entry into Ethereum right now? Yeah, I would, because there's a Philippines bank yesterday said that they will move forward with Ethereum to be part of their, I'm not sure what they're doing. I haven't read the article, but it is mainstream with this Philippines bank. And they mentioned Ethereum. And I think there's more potential with Ethereum. And also Steve Wozniak said that Ethereum's the one to watch, not Bitcoin. So that's catching a lot of momentum. And Ashley says, I built a slippage calculator that could help you get an idea how much slippage will affect your entries and exits. Yeah, if you want, send it over. I don't know if you have my contact, but let me know about that. Ethereum Head and Shoulders down to 444. Right. Yeah, I mean, what's your outlook on that, Ashley, on the Ethereum? Now, remember, we're doing currency pairs. We're not focusing just on one currency. It's currency pairs. ABC down to 427. And what type of expected time frame will that happen, that kind of move? So that's the question. And as you said, the slippage is a big one. So, you know, yeah, I personally think that crypto is definitely the place to be if you want to see the moves, because when you look at when I played around with Forex a few months ago, I just the moves were just not there, not like what I'm seeing with crypto. But I'm going to do another scan in the next few days and let you know what I see. And because I'm now using 315 assets, that's pretty high. And the other exchange that I experimented one called OK Coin. When you go to the coin market cap, the difference between in terms of 24-hour volume of Bitcoin versus OK, here I'll show you that actually. So if I go to the coin market cap, did this last week. One day, OK X is the bigger exchange. So I'm doing the 24 ranking by exchange. So here, OKX is now on top with 1.4 billion for the day. Then we have Huobi, 1.3, and then you get Binance. And these top three always move up and down. So the best one that I get for data is Binance, but I can easily download this one with OKX and Huobi. I'm probably butchering the names, but this one's the easiest. It's most reliable to download data without any form of server error. This one only allows me to download up to 500. And this one also has 520 some odd pairs. You know, for Binance to have 300 pairs, it's pretty good, but OKX is 500, and Huobi, I haven't really checked yet, but I'd be interested to see if they're worth pursuing. But for some of the people in my group have told me that Huobi is very bad because it's not to be trusted, because you can trade in it, but it can take up to 3 weeks to withdraw your funds. So I purposely not looked at Huobi. I'd like to see the data if it's hard to do, hard to work with. I've also looked at Bitfenix as well. This one issues actually denial of server responses and close off the connection, thinking it's getting attacked for my requests. And that happens after five requests for 5 different currencies. And then it just shuts down the connection. So the only one out of these top 4, as I said, is Binance. I don't come across these weird problems. And I've also used markets with no fees. BitMEX as well as a problem. This is pretty big too, 2.1 billion. So, you know, but do realize that it does flip quite a bit between OKX, Huobi, which is out of Japan. I don't know. I think this is out of China or Hong Kong. This one's out of China, the Binance. So all that volume is driven through Asia. And it's just a matter of time before the regulators, be it in Korea, be it in Japan or China, will step in and try to heavily regulate these guys, because the Huobi one, I think it's Japanese, they were told to drop all private cryptocurrencies. We're talking Monero and Zcash, and Monero is a big one that's in the top. It's in the top 10, and the Japanese regulators wanted them to shut down, to drop Monero because it's a private coin. And here you are, it's number 13. So it's pretty significant, and the Japanese market is very, very, or the Japanese government is very scared of Monero because it's private and it's anonymous. They can't track and regulate this crypto because it's private and it's anonymous. And that's the same one with Dash and Zcash as well. So those 3 are the ones that the regulators are trying to shut down or get the exchanges not to accept and allow those 3 to be traded on their exchanges, because they're private, and you can do a lot of, call it illegal stuff on the exchanges once you get everything transferred into those three currencies. And I won't be surprised many other governments will try to shut down and cut off the access to those three. And oddly enough, I've heard through other traders and programmers, most of the software development does go into those three: anonymous and private cryptocurrencies. Because why? Because they're anonymous, they're not traceable. So that's where a lot of the software development goes. So what's that going to do to the price? It's going to drive it up. If I looked at Monero, hasn't moved a lot, but I think at some point there'll be something coming out of the Monero community that will be a technology breakthrough of some kind, and probably drive up the price and the volume of Monero. That's how I look at it in terms of all the cryptocurrencies out there. So, but as I said last week, my video, these are all negative, a lot of them. Last count I had, I only counted 3 that were profitable. There's a lot more, but still the majority of them are negative. But using that automated head and shoulders, I was able to see that there's some opportunity there to make money that you won't see. But that's why you got to build the automation to have it run and check the markets and scan it probably every hour, or at least every 2 hours. As you can tell, I ramble a lot. So anybody else got any questions or comments? You can pretty well ask me anything you want. Anybody? As I said, I don't have anybody on my other webinar, but everybody's on my YouTube. Wow, thanks for the likes, guys. Appreciate it. Doing a good job, I guess. Brian from Ashley. Brian, not trying to change the subject. Do you have a video introducing yourself and your background? I used to. Funny enough, I did a video or presentation last week for FXCM. They're going to be doing a video of me and Dr. Ernie Chan on our overall how we started. Well, I mean, I did a 10-minute little thing of how I started. It's a pretty good video to watch if you're interested in what I do. Same with Ernie as well. And I don't know when they're going to edit that and make it available, but that's something to watch. I don't really have any videos on myself because the reason is it's not about me. It's about you guys and trading results. That seems to be what most people want. They don't really care about me. But if you want to know, I've been at it for 9 years now. And I've pretty well selected Python as my trading language because it's easy and I can get coding scripts written pretty fast. And I really like Python, and I'm liking crypto what I'm seeing so far. It would be good to know my trading results. Yeah, I don't blame you. You're not the only one. Because as I said, I'm gonna launch or fund an account in crypto, probably move it into Binance and showcase the trading results using the various trading methodologies that I've gone on about for the last few weeks to months, using mostly technical analysis. Nothing to brag about, but that seems to work pretty good. Python better than Matlab. Oh, hey, Jones, how are you? Yeah, Matlab I like a lot. And I do a lot of, I don't know if you know the website Quora. It's kind of like a Stack Overflow, but it's got better people, more industry people on that website. And there was a question on why is Matlab still valid? And the real reason is because of the Simulink. That's a very powerful tool, but it's very, very expensive, going up in the neighborhood of, like, let's say 50,000. So Python's the core of my Matlab. I think Python's better, but it's free. And that's the big thing with Python. And it's very, oh, let me spell that out. Okay, everybody's on the, I'll put it, hang on here. All right. No, it's spelled, let me see. No, I'll go to it. Quora. Quora. And here you'll get all the questions on daily, and you'll get people answering those questions. Very good place to learn about machine learning, Python, or whatever you fancy. A lot of trading in there, programming, and that's the site I'm referring to. QU, well, hopefully you can see it right here, QUORA.com. So hopefully I'll help you out. So is Matlab any good when it comes to Forex algo trading now? Python, as last time I checked, you can get direct connection into interactive brokers for Forex, which is not bad. So you can do it that way, but again, it's expensive. And okay, cool, Jones. Yeah, it's very expensive to do a lot of things with Matlab. You can do pretty well a lot of things in Python for free, and there's a much more vast language as well in terms of community and development and whatnot. So yeah. Anybody else got any questions? So to answer your question, Jones, oh no, sorry, GVMC. Somebody else. Oh yeah, Jones about Matlab. So if you guys got any other questions, let me know. I'll definitely try to answer whatever I can. Anybody else? So don't be shy. As I said, I did a talk last week, and FXCM run the data provider. They run a website called Quant News. Here, I can put it into the browser here. Yeah, it's called quantnews.com. And there's some interesting stuff in there. They talk to Yves Yiplich, and so on and so forth. Ernie Chan's in their interviews and so forth. So hopefully I'll help you out. Question from Ashley: are you able to find simple trendline breaks with this software? Absolutely. I shown one for the S&P, which was in April. Trend is really powerful. It's simple too. Combine that with the Fibonacci for pricing value. You can see historically where you will be making money in that chart. What I did show is it was since the beginning of the year. The trend clearly shows where the profitable opportunities was in January, February, and then the price on the S&P just drops off. And if you kept that trend line in place, which is 240 days, which is a year, yeah, the market came off quite a bit. And that's really good for valuation as well. Matlab has some home edition now for $150. Yes, I know about the Matlab home version. The problem with it is now for $150 is nothing. That's the core version. And when you want to start adding toolboxes, it's like $20, $30 for each toolbox. But here's where they get you. You develop your model, you can get everything you want. But let's say if you want to code generate into C or C++ through Simulink, they won't allow you to do that through the home edition. The home edition's to get you hooked, get you going, wow, this is a great tool and platform, and then you want to do real stuff with it. Yeah, that's where you're going to start hitting that limitation, and you'll have to end up moving into the more expensive toolboxes and the product itself. But you'll get the support, but you could run into $20,000, $30,000, $40,000 solution. And you also, as far as I know, you have to purchase that every 4 years to maintain the support. So I don't know about the support for the home version, but I do know that it can run you up quite a bit. And the prices may have come down, but back to that same Quora. Actually, I'm going to see if I can find the article on Quora. I think it was like, is Matlab dead or something like that. And yeah, so it might be this one. So yeah, so Again, if you compare it to Matplotlib, these 3 packages is really all you need for free. And it gives you object-oriented programming, but I wouldn't even recommend going that route with a interpreted language. And then there maybe might another bit an answer about Simulink and how where MATLAB's used, which is really in automotive for what do you call the autonomous cars. A lot of simulations are run through Simulink and Stateflow, and that's the real reason why people use it. That's why it's still a valid product, even for NASA. But it's not really meant for smaller folks. They only have the home edition to get people hooked and have a career using MATLAB in big corporations. But this is a pretty good article if you want to know the difference between MATLAB and Python. But the thing is with Python, MATLAB, the machine learning is awesome. This is a great tool. Don't get me wrong. It's very powerful, and the GPU is so easy. So Jones says Ernie Chan likes MATLAB. Well, I just saw him today, and Ernie started in 2006 or 7. The only tool of its kind that the Python wasn't nowhere as mainstream as it was back then. So his only tool was MATLAB, and he's used MATLAB for a very long time. And as a result, he uses that, and he also does college courses. I think it's an online course in Chicago, if getting school, and he does R a little bit for educational. And but when it comes to his production code, he will take the MATLAB model and then transcode it into C# because his partner's a big C# guy. And that has not changed since last time I saw him about 3 years ago. So everything stays in place. The strategies, his core strategies are the same. His technology is the same. Nothing's really changed, but he's added a few new people to his firm. But from the basics are all the same. Ashley, good to meet you, Brian. We'll be following your vids. Thanks, man. No problem. I hope to get some more interesting videos out there for y'all. Yeah. Oh, also, let me just make sure if you're on my group in the Facebook group. Let me see. I think I did load that up. Let's see here. Yes, Facebook. Okay, so if you go into my Facebook group, I run a page, QuantLabs.net, but this one is the interesting group you want to be part of. Just look for Quant HFT, high frequency trading with MATLAB, C++. All my stuff goes in there now, not my blog. So I post a lot of stuff in here on Facebook, and I have a better engagement with people on Facebook than anywhere else. So that's where I put all my focus. And I've got about almost pushing, I think, 11 or 12,000 people. Sorry, almost 10,808 people in the group. So it's a pretty big group. Anybody else got any questions? But thanks for coming out. I'm not sure if you're dropping off Ashley Madison. Those that don't know Ashley Madison, it's a website for spouses that aren't happy in their marriage. We'll just leave it at that. That's the original Ashley Madison, as far as I know. Or maybe something else, but who knows? It could be his real name. Let's see. Any other questions so far? Anybody? Because we're coming up to almost 9 o'clock. I anticipate an hour. If you guys got any further questions, I can help you out wherever I can. I do these every Monday night. Last week was a little weird because we had a Canadian Victoria Day, which is the US right now. Today has Memorial Day. So we had ours last week. Because I did my talk, the people online would have missed out. So I did a follow-on one on Wednesday. But we're back to normal on the Monday nights. Anybody got questions, comments? I appreciate the likes. I really do. That sort of excites me because I know people are actually responding and engaging. Anybody? I'm not sure what I'm going to talk about next time. I'm hoping to do something next week, but I'm thinking, obviously, it's going to be more cryptocurrency. Might be able to talk about my experience with funding an account and going into Binance. Might have some better ideas with the cryptocurrency exchanges. You can see, as I pointed out on the CoinMarketCap, on the cryptocurrencies, on the different ones. But I can tell you, I'm only interested in the larger exchanges, because I just heard that there's a lot of manipulation on the cryptocurrency, small ones. Now, we don't know on the bigger ones, but the only one that may be reliable in terms of that you can trust, questionable still one in that, is Binance. As I said, the Bitfenix is pretty well, I'm not going to use because, as I said, it's denial of service attacks when I request stuff. Globally is a 3-week withdrawal of your funds, and OKX is just like BitMEX. It only allows 500 downloads. So your ultimate aim is to get an algo trading setup up and running. Yeah, you could say, Jones, that's my plan. I've got all the stuff built, among other things from the past, in Python. So I'm trying to keep everything in Python. I did a big, long experimentation with Dukas copy in Java. I think that for the effort, you get little return. It's a good broker, really good platform, and the API is pretty advanced. But for now, from last week, when I started dipping into cryptocurrency, I started realizing that's the place to be. It is a tough market because of the volatility of it, but the swings are massive. I mean, let me just show you that. But when it comes to full-blown end-to-end, fully automated trading system with automated execution and orders, yeah, that's a definite answer. And I have the capabilities to do that, and at least I want to be able to provide signals. And I do that already through the trades. So GVCMC company asks, this is Mike DT from the Meetup group. How you doing? Is managed by my managed PPC software co. I'm a beginner and appreciate answering everyone's questions. No problem. I mean, the groups are really small. I like them small because it's exactly that. I can answer people's questions and talk one-on-one with everybody and make sure I can help out. But the one that I followed, she gets up to, I've seen up to 1,200 people on her web streams, and she's huge. And that's where I get a lot of my recent ideas from as well. It's from, her name's Nicola Drake. I'll pull up the site if you're interested. But I just want to show you, here's the percent moves in crypto. These are negative, and even if you decide to short at 8%, you get one of those correct each and every day. You with the power of my math is very bad. Power of exponent, no. It definitely will get you there faster if you get the calls right, right? And yeah, that's the problem. So I just want to show you the moves are very big. And Forex is tiny, and that's why you have to use leverage, and it adds the risk. It's not worth it. But here, you could go dollar for dollar. You get that call right, you can get 10% with no leverage, which is perfect. And I don't care if it's regular. Well, I do care as long as I can get my money out in a relative short time period. So for me, I'm not waiting 3 weeks for my money. And as I said, you only fund the account that you're willing to lose, because as you may know, a few years ago, Mt. Gox, if you had 10 grand in a cryptocurrency broker, and that money vanishes. So you want to make sure that when you put money into these exchanges, that you can afford to lose. It's a high risk move, I realize, but for these kind of moves, it's kind of appealing. And the other goal is to still get the strategy working for any asset class, because it's universal. GVSC. So is retailing in Forex a thing of the past? I really don't know. I think it is. It's very hard for the brokers in Forex to compete against the exchanges because there's so much volume. And I'll give you an example in that. Let me at least show you before I forget the Nick trades. So if you do a Google search on Nick trades, you can find all her details on what she's done. So I'm just basically automating her strategy, and I'm now extending it and doing more with it. So you can just go to this nicktrades.com. So the question was from GVMC about Forex brokers. A good way to check that is if you go to alexa.com as an example, and you say, I don't know, I'm not going to put in FXCM, but one of the bigger brokers, I guess Awanda is a good one. Let me see here if I can get the rankings. Those make it difficult to. That's another way I can do it. So if I just do awanda.com, Alexa, you'll notice the how popular it is. Now I will expect that it's still pretty popular, but it has dropped off not quite a bit, but it is dropped off. If I do the same thing for another broker like Dukas Copy, I think it was Dukas Copy, it showed me a big drop. So you can see that drop a little bit. So it's coming off, and a lot of the brokers, I think, are losing volume because of cryptocurrency. So, but they somehow managed to come back. But you know, from 150K to 250K, that's a drop for lmax.com. And the thing is, some of the brokers like Dukas Copy, what they've done is they've added a CFD for Bitcoin. And it's not really a Bitcoin on a Bitcoin exchange like Binance. But you're buying a CFD. So you're buying an underlying asset or instrument that's supposed to simulate the market or the asset of Bitcoin, but it's not the real McCoy. And LMAX have added four large cryptocurrencies: Litecoin, Bitcoin Cash, Bitcoin, and Ethereum, or one of the four popular ones. Yeah, so they've added those. But again, I don't know if that's through an exchange or not. Question from Kev: how is Monero doing? Well, we just talked about Monero a while back. Here's Monero, number 13. It was in the top 10, but Monero is no different, getting hit and hammered hard by other exchanges. But when you look at the news of Japan, that's not helping Monero. So I think they got hit because of it, where they got hit on the news that the exchange, the regulators, the Japanese regulators want the cryptocurrency exchanges to no longer allow access to Monero. Who knows? But Monero's is the one to watch for sure. Any other questions? Comments? So I know I'm relying on the synchronization of the YouTube. I'm hoping to get some questions, but it's about 1 minute to 2 minutes difference. So I can't just cut off people. So I can wait it out. If anybody's got any other questions or comments, I can definitely hold up. Anybody got questions? Comments? Anybody? Oh, here we go. Have you given up on options? No, I've not. I'll tell you some. Options I love. The problem is last year I made a decision to start with a micro account. I was looking at Interactive Brokers, but they wanted $10,000. So I didn't want to put up the risk of 10 grand. I mean, that's a bit of money for me. I mean, if I had to, I could lump it, but it's still a chunk of change for, high net worth guys. It's just a drop in the bucket for them. So for retail traders, I purposely wanted to go out and start a micro account, $100, $1,000. And the only broker that I knew of that was reliable, that you could kind of get away with on that amount, little pittance, is with either Oanda or Dukas Copy. And I tried Oanda. It was a nightmare to work with them. So I moved over to Dukas Copy, and because Dukas Copy was no longer Python, I had to go through a huge learning curve and implementation to work with the Java and the J4X. So I've gone through that, looked at the results, was not happy with the pittance returns for the risk. And then along comes crypto, and I start to see the returns for pretty well nothing to start with. And that's where I am today. The software, so regarding options is fantastic, but to really get around to make anything out of options, you got to start with probably 25 grand, 20 grand. But you can get away with 10 grand, but it's very tough to start small in options. So I've done a survey a few months ago on asset classes, which people have a big interest in. And I'll tell you, crypto came out on top with the same responses for options. And that's what I see. I think options is a fantastic asset class. And there's so much info there to work with in detail. So I will eventually go into options if I can grow an account. But that's ultimately where I want to be. Like I said, I did talk to Ernie today about what he trades, and he's trading futures and currencies. And he does it all through Interactive Brokers. So that's his asset class. And he's probably minimum 7 digits. So I'm not sure if I answered that question of GFCMC. Mike T here. The software you use created, can it be used for both Forex and crypto trading? So I think options are great and can be. Yes, they are safe. The problem is how much money you need to start with. Yeah, there's binary options, but we know they're a scam. But to do it properly, only on Interactive Brokers, you need a minimum of 10 grand. So that's the only thing holding me back is the account size to start with. Back to the other previous question, the software you use created, can it be used for both Forex and crypto trading? Yes, and it can be used pretty well on any asset class. And the reason I say that is because these are just simple technical indicators that can be used on anything for any time frame. And I will say this, the Dukas Copy is a tough platform to work with because it's J4X and Java. So to integrate that with Python is very tough. So that is kind of like in the background for me. But with the FXCM data that I got access to, I was shocked on how easy it was to get up and running within 20 minutes, if that. And FXCM is good, and I think they're really trying to come around with their arrangement here in Canada with I can't remember, Fred Friedtech or something like that, Friedelberg. They're actually regulated in Canada, so that means they have the license for the technology and the infrastructure of XCM, and FXCM licenses it to them, and so you're getting access to FXCM data, and the platform, the execution, but the broker you use is regulated. So that will raise up my confidence quite a bit with FXCM. And FXCM the API is very easy. I was shocked. The only drawback with FXCM, unfortunately, is the selection of currencies, and the CFDs is very small. Oanda is pretty good, but they're just really bad to work with. They're not a broker I would recommend, but they do support Python, and I was never, it was a hit and miss for me to get that API up and running. Whereas FXCM was way easier, way easier. So I prefer to keep everything in Python now. And because I'm working with the CCXT, I'm finding I'm able to work with that much easier. And because I've built these indicators for Python, the hard part for me to make a switch from one broker to the other to answer the question is it's so easy now because I'm working with flat files. So for me, I've got all the indicators working in Python, but only connected to Dukas copy. So I just change a few things in the ordering and the columns with data frames in Python and be able to read the same flat file, but switch it over to CCXT. And the switch is very simple. You could probably do it in half an hour if you're not accomplished. But if you know about data frames and how to read in the data and how to move the data, you're up and running, I won't say minutes, but within pretty fast. That's the beauty of Python. So the answer to the question, sorry to ramble on about, yes, you can easily use this strategy, whatever you want to call it, indicators for any asset class, any time frame. The only thing you got to worry about is the data source. And right now I'm only working with the flat files, the CSVs. So yeah, and because it's 100% Python, it's much, much easier. And you don't have to go through the wonky development with Dukas copy. And I think over time that will be something that Dukas copy as a broker will have to worry about to really stay in the game. But it looks like FXCM's there. Oanda, unfortunately, but they are in Python. But there's a huge move for Python. And if you ever were able to get a package at CCXT, and that can work with pretty well, and I'll show it to you if you need, for all the new people. So if you go to the GitHub and then the CCXT, this is a great, really good wrapper. So I'm very excited with this one. GitHub CCXT. So here they have three options for Python, PHP, or JavaScript. Python's the one most people work with. And again, you've got, last count was 115 brokers or exchanges, and there you go. And it works with pretty all the major ones. Any other questions? Because I think I'm up to date with the questions. But this is what I'm working with. And I'm able to swap out Binance to OKX or to, they also support, as I said, Huobi. There's 3 different connections. It looks like that's Chinese. I played with Bitfenix, which is out of, I think it's US Virgin Islands. So here there's two API versions, which I'm just discovering now. I've worked with Binance, which is the better one, and OKX as well in here, as I showed in the coinmarketcap.com. So right now, these are where they're based. The one I'm planning to use to fund the account is Coinbase. It's easy if you have a debit card, and then just transfer your Bitcoin from Coinbase into whatever exchange, in my case, Binance. But as I said before, make sure that whatever you fund that exchange, that you're willing to lose. So don't put your kids' trust funds into these things at all. Your retirement, no. A small little bit of money, play with a strategy, and then worry about the next step. Because by the time you get to you can prove the strategy works, this whole exchange thing is going to be different again. And that's the problem with these exchanges, is because there's regulators that step in. Some of them may have some kind of news story. They get ripped off, they get hacked, blah, blah, blah. And yeah, you have to worry about that. Anybody other got any questions? So I pretty well talked about everything. I'm now fully in full hog with the crypto using CCXT. I was able to download it. My next step is to actually get some live trading working. And I'm planning to do that with the strategies that I've got, with the indicators I've shown and blabbed about for the last number of months. So let me know if that helps you out or got any further questions. Appreciate you guys holding on for an hour and a quarter. Really, I do. I think I've learned quite a bit from quite a few of you so far. If you guys have any other questions, let me know. You can also reach me through the YouTube chat, the messenger. There is one, or the comments are pretty good. I read all the comments. I do get the occasional one where it says I'm a so-and-so, and I just delete them. I can't be bothered dealing with people like that. But if you got any questions, let me know. I'll hang on for a few minutes here. So if you got any questions, let me know. I'll even engage here, but oh, let me see if I can get into YouTube here. So next week I might do a general question about might get some feedback here. Okay, so I'm on the chat. Keep it more. Any further questions? So I'm typing away here, trying to chat in real time with you guys. So next week we'll keep you up to date with these things on the on the YouTube and other webinar software I use. Any So I'm just going to type in here, any comments? And shall I wrap up? Huh. Oh, we got more people. I don't know if that's including my other connection into YouTube, but hooray, hooray, hooray. So I'll do a countdown. So I'm going to do a countdown here. So I'll do a going once. Do it 3 times here, going twice. Oh, Jones asked, have you found a strategy that works well, that uses technical analysis? I haven't. I said in my talk here last week about 3 ways to look at the market. There is, the first way is to look at from a mathematician, from a computer scientist, or as a trader. I will guarantee you, and I asked this question, everyone agreed, that you look at the market as a trader, you'll make the most amount of money. So I'm not sure how you view the market, but you will see trends that most mathematicians nor computer scientists will see. So you can make money with technical analysis, but you have to use technical analysis differently than most retail traders. And as I said, I mentioned Nick Trades. I'll just put that in the chat. Nick Trades. You will see her do a different methodology in seeing the market. And what she does is based upon events and sets targets on those events. Once those targets are met, then she enters in the market. So yes, she is using technical analysis, but it's a different view of the market. Can technical analysis be built into your system or a separate system? Everything's the same system. But my approach is very different from most people. Will build a monolithic one system, like one interface with the menu base where you have menu pull down menus and so on and so forth. That's one way to build the software. So you could put all that into one system. In my case, what I do, I keep it simple. I write everything in scripts. So I have a script that will download Fibonacci, another script that will download and analyze moving average, and so on. And that's how I do it. So I can run as many scripts as I want, whenever I want, and be able to use that better, and not have to create a new system, as you could call it. It's a collection of scripts, basically, in Python. Very simple. And it just does a result, and I can push that data, if I wanted the result, into a database, which I have built using NoSQL Redis. I mentioned that before. And that's where I hold my data. And you can do some very powerful stuff with that because it's open source. And that can be of any language you want, which I right now would prefer to keep in Python. So I'm not sure if that answers your question. Any more questions?